out of the Waterloo Region, Zack Brittain.
Just shows how insane and how volatile our market has been in the short term. In June of this year, average sale price of a detached home was just over $1 million again, right? It came up 60 grand from May to June and then went down from June to end of July, 80 grand. So the monthly swings are insane. We're seeing 6 to 8% like average sale price swings in a month. So what's worth $1 million last month is worth, $920 this month. People that are getting priced out of the market entirely, it's going to be so much harder for you to get back in. And people that are offloading real estate with the expectation that they're going to be able to buy 50%, 25% less than what they get now, guys, what's really going to happen is we may get a little pullback. Maybe we may come down a little bit in price, but there's no way asset values are going down 25 to 50%.
No way.
Our country would be set on fire.
Yeah.
Game over. Canada's gone. It's dead.
Hey everybody, and welcome to the Canadian Real Estate Channel. My name is Rob Chopra, and today I'm going to be your host with a very special guest out of the Waterloo Region, Zack Brittain. So just a little bit of background about myself. I am an investor based out of Hamilton, primarily investing in the Niagara region. I'm also a mortgage agent with the Finlay Mortgage team out of Cambridge, Ontario, where I help investors scale through the residential portfolios up into larger multifamily. So today we're super excited to welcome Zack to the show. We're going to deep dive into this. We got a lot to cover today on the Waterloo market. We're going to jump into, I think, some ADU stuff, into multifamily. So Zack, welcome to the show. Why don't you let everybody know a little bit about yourself and kind of what you do in the Waterloo area?
Yeah. So me and Rob, we've met. This is a great opportunity. We've done a little bit of business. We'll get to that later in the presentation. But if you guys are new to the Canadian Real Estate Channel, I am a licensed and insured real estate agent in Waterloo Region. I've been selling here full time for 7 years and turned real estate investor. Was an investor before I got into real estate sales, then got into real estate investing. We cover Waterloo Region is like our home base. This is where 95% of our business is. This is where we invest ourselves. And, I have a team, one other partner that helps me sell real estate. We got a full-time admin. We got a construction team. We got property managers. We got great financiers. So we've really spent the last few years building out our, let's say our power team. I know that's kind of a buzzword now, but we're doing something very similar that you guys are doing, Rob. We're really helping our clients scale from, if you have some experience or you've muscled your way into a few smaller investment properties or multi-units. All right, how can we take that and scale or take that and make it more profitable is really, kind of our core business right now. A lot of first-time investors, a lot of newer investors that have experience in other markets but are starting to see value in Waterloo Region. So we're having a lot of people come from out of town as well. And we get like lots of viewers and lots of great comments from people that are trying to learn more about our market. So in this, what I'll do is I'll pull up just our notes here, guys. But in this week's or this month's video, if you guys are watching this and you want to know what the heck we're going to cover, I mean, me and Rob are going to have some back and forth as fellow investors ourselves, like chopping it up with other real estate investors. It's half the fun, but like we're going to give you the baseline information you need to know about Waterloo Region. If you're fairly new or you're not actively involved in our real estate market, I need you guys to leave this video knowing kind of where we stand now, where we've been for the last 12 months or so, and what the expectations are kind of for the rest of the year. And then next, Rob, like you work with a lot of investors as well. The people that are making acquisitions now, new acquisitions now, it's tricky to find value. The numbers are getting a little bit trickier, but I want to go through some examples and some numbers on potential deals that are available in our market that do make sense for a specific type of investor. For myself as an active investor, I'm always looking to acquire. So I want to go over what these types of deals could potentially be, and then some numbers behind them. And then obviously if the people watching these videos don't have somebody to help them with the numbers already, guys, Rob, your guy. Experienced himself as an investor, but also on the finance side. So feel free to reach out. We've had some success ourselves. So not a bad contact to have. Not a bad guy to host me this week either, as we're going through the numbers.
I appreciate that, Zach. Today's going to be a lot of fun. I think a lot of this, like in terms of value for investors, is a question that a lot of people have, right? Seeing what the market data actually looks like to get into this and the type of market, like you mentioned about, investors kind of trying to figure out where it works for them to get into a niche. As interest rates increase, right, the qualifications get a little bit higher. So it's all about the creation of a deal and stuff. So we got a wicked power team here for today's show, man. I'm excited.
Yes, sir. And I just want to highlight, we are very active on our Instagram page. We post a lot of like smaller clips, little hints and tricks, comments about, we did some videos last week about our favorite neighborhoods in Waterloo, Kitchener, and Cambridge. And we also do a lot of updates, smaller updates on like our ADU projects, our investment properties, listings we have. We have just under 2,000 followers. We're looking to hit 2,000 before the end of the year, and we're going to crush it. But if you guys aren't already following us on Instagram, got to go check it out. We're very active there. And plus, I get DMs from people all the time. Like, hey, what about this property? Or, hey, like I'm thinking about doing this type of deal. Or, hey, what do you got in your market for this, this, and this? Like a quick DM may give you a ton of information, or at least I can link you to some resources, but that you get direct access to me. So if you guys want to get on board, follow us on our Instagram page. We can hook you up.
Love that.
So we're going to go, I hate just dumping graphs and dumping numbers. Sometimes, images are, pictures are worth 1,000 words. And this is one that I really did want to share because it just shows how insane and how volatile our market has been in the short term. Rob, like you've been investing for years.
Mm-hmm.
As myself, 5 years now, holding property in Waterloo Region. That's not that long in the real estate game, personally for me. But in the 5 years that I've owned property, we have seen insane swings, like insane. Traditionally, a lot of investors who are a little bit more experienced or have invested, 10, 20, 30 years ago, they're running their numbers on 1% to 2%, maybe 3% appreciation. And typically I do that based on inflation, 2 to 3% inflation. Well, our markets have swung more than 3% a month, up, down, side. So just take a breath and realize how volatile our market really is. In June of this year, average sale price of a detached home was just over $1 million again. Right? It came up 60 grand from May to June and then went down from June to end of July, 80 grand. So the monthly swings are insane. We're seeing 6 to 8% like average sale price swings in a month. So what's worth $1 million last month is worth, 920 this month. So, and realize these are averages, guys. So there are a lot of things that are going to happen above and below these average figures. But I just want to highlight, when a market is really volatile, it is a little bit trickier to find value because there is much more discrepancies in prices. Some properties you see move right away and you're like, oh my God, that was a really cheap deal. And then 2 weeks later, you see a few other comparable sales sell around that price point because now they've just reset the market price. And so this just goes to show how volatile our market's really been for these types of properties. This is single family homes. We got some other charts here real quick. This is average sale price by category. So if you're an investor, or maybe even you're a homeowner with the kind of that investor mindset, and you want to have a better idea of, really where your property type fits into the market, like these are averages for July. So if I looked at July in 2021, I was, 897K. Last year, 846K for a single family home. Now this year, back up to 920. So think about this, Rob. In May, June, your property's worth about your single family home's worth about $1 million. But, you had to delay the listing because you're going on the family vacation, or, you took too long to get the exterior fixed up or do some of the touch-ups inside, whatever. Well, your market is changing so much month to month and even week to week that it's really hard for us to give clients sound advice multiple months in advance, because we're seeing, like I said, $60,000 to $80,000 swings in the single family home market. And that can get even more different in the multi-unit market for investors. But like it's volatile. Whereas with townhouses and townhouses and semis, they're just slow and steady, consistently going up. Do you have any idea why that is?
That's a great question. I mean, if I had to attribute to maybe potentially what it is, it's actually, the family that actually needs a place to live in that situation. So the inventory is a little bit lower.
Yep.
Versus
Definitely.
more inventory on the market and the volatility, let's say in the single family area where investors are looking for highest and best use.
Yeah, absolutely. And consider this. If financing is getting more and more expensive and it's restricting some buyers or some investors, well, if they can't afford the big single family detached anymore, well, maybe they'll go to their next best option, which would be a semi or a freehold townhome. And so as pricing, is a little bit more volatile, if interest rates are choking some buyers out of the higher price points, like nice big single family detached homes, well, and they're going to move into something more affordable. And we've seen the affordable properties, specifically freehold towns and semis, like you said, smaller market, less inventory, less volume. So you're going to see people competing for those types of deals because they're straight up just more affordable, right? And so those price points have held on average a little bit more consistent compared to our detached homes. And then if we flip real quick back to the condo market, we saw our condo market explode in 2022. Investors were still flocking to those. We had a lot of new projects coming, but then they've taken a slide here. We're about down almost 5% from the same time last year in average sale price. We've seen a big boom in condos in Waterloo Region. Those weren't very common until about 5 to 10 years ago. And now the redevelopment of the city around the downtown hub, around the Ion Rail Transit, and around uptown Waterloo has really exploded with condo redevelopment. And so we are seeing a lot more of those come to market. We are also seeing a lot of developers put projects like that on hold or delay them because of how expensive financing costs have gotten. And it's been harder for them to offload units in order to continue and complete builds or to even start builds. So if demand for that is cooled like it has, we expect that to slow for a little bit, but then really expect another boom in condo developments to start really popping up as soon as we get signals that interest rates are starting to come back down, whenever that might be. So overall, sorry, go ahead, Rob.
I was just going to say, essentially, when you look at interest rates and financing costs, this doesn't just come down to actually the end user, such as you and I buying a house for our family, for example, versus what it looks like to the builders as well from a financing cost, right? Yeah. And essentially delaying these projects. And we've seen the challenges being faced in that situation also of the fact that the interest rates are so high, the appraisal is not coming in where they need to be, and the qualification for our buyers coming down. Now, the great news is there's solutions. But again, this can be something that can delay time.
100%. And I think that a lot of developers have probably gotten rid of or delayed more riskier projects. And again, they may have tried to lock in financing for projects that they know they can finish and move. But this is kind of expected. If it's more expensive to get a loan, then it's going to be more expensive to build and develop, whether it's a real estate or a business or anything else that you're going to need a loan for. And so less people are going to be inclined to take the loans and to do business. So overall, we expect volume of new listings for pre-construction condos to fall and not continue to increase as aggressively as they were. But that's a short-term thing. Condos are here to stay in Waterloo Region. There's a lot of money locations that need to be redeveloped, and we need more units. And as long as a builder or developer can make money by redeveloping something into a condo unit, they're going to do it. So we expect to see this get a little bit slow here for the next 6 to 12 months, maybe. But if you are looking for a condo as a buyer or as an investor, not necessarily my cup of tea. I think there's better cash flow options elsewhere. But those types of pre-construction investments do fit some specific types of investors. And there are a lot of incentives out there. And there are some premium locations that still have units available, whether it's pre-con or a resale unit that just got finished and they're closed. They're trying to move it now. So let us know. Not necessarily the most complicated, but there's lots of little tips and tricks to get premium locations, premium features in your unit, where in the building, which buildings you should avoid because the condo corp sucks, and little just tips and tricks that we can share your way. We do a handful of those every year, typically for, more of our hands-off investors or a lot of investors that are purchasing property for family members. Right? They need a nice clean spot for their kids or their nephews to go to school. There's a lot of great spots in really nice areas in Kitchener that it will appreciate well. But generally speaking, condo market's going to be a little volatile here for the short term.
Yeah, I resonate with the fact about not being the cup of tea, but here's something I think to keep into consideration, because you talk a little bit of hands-off investors as well. Yeah. In these situations, essentially condo fees can be something that can be detrimental to your cash flow, right? That's what brings your cash flow down a little bit, the HOA fees, whatever you want to call that. Yeah. In this case, if you can get a little bit of a discount on the actual condo itself, on the carrying cost of that, you can somewhat offset that and essentially increase your cash flow. But it's about understanding that it is an asset class that's not for everybody. However, I've been out there, I can't remember the restaurant that's out there in the Kitchener area, but there's this beautiful condo development right around there. It's got everything for what somebody would want, whether you're an investor or whether you're actually looking for a place to live. It's a very cool location. I just can't remember off the top of my head, Zach.
We've been fortunate though, because the condo boom has been really recent. And honestly, like, yeah, you don't get a ton of space necessarily, but your locations and your features and your amenities are so nice. Do you know what I mean? Like the locations are just so good. A lot of the condo developments are like in core areas, walking distance to everything. You can still get parking and storage without a premium cost attached to it. So like there are options, but we will get into more of the types of deals that we're seeing and some of the numbers behind them. We're not going to cover condos. They're not necessarily. But, I did just want to cover. So I was making this, I was trying to think of how I can probably describe how wild it was. And like back in the day, I remember I had a music school teacher who was like obsessed. Like they were like a professional cello player in like this was middle school or high school. And they were like trying to teach us like music about Yo-Yo Ma, who's like the only cello player that I've ever heard of. So I had to, and I know this meme here, the photo I got is like been a meme on the internet for decades, and it's just too good. So I had to, a little ode, a little reference to the only cello player I've ever known, Yo-Yo Ma. I want to talk about just how significant these fluctuations are. Like guys, you're seeing, like I said, 2, 3, 4, 5, all the way up to 8% changes in average sale price month to month. Like that is significant. And it's also significant to acknowledge that we still have low supply, but it's slowly creeping up. That is common for this time of year. So if you look at the supply graph by month, by year, you're typically going to get a little bit more supply in the summer as properties are trying to get moved before the school year and during the good weather. So people that either miss the spring market or ended up buying something in the spring and now have to sell in the summer, we do see a little bit of inventory. You see the inventory come up because some buyers just aren't really around in the summer. More people taking vacation, more people off with the kids for school. You see less volume overall happening in that time of the market. And then like, I also just want to highlight, like our inventory is low and it's climbing, but it's still historically low. We still have less than 2 months of inventory. We need 4 months. We need double the amount of homes on the market to have a balanced market. So you're going to get short-term volatility, but if supply remains low, prices will continue to climb in the long term. Straight up, there's not enough supply available for the demand that is here in Waterloo Region. This is very common in a lot of markets in Southern Ontario, but specifically in Waterloo Region, we've had below 2 months of inventory for over 7 years. Straight. We have gotten up to never gone over. It's crazy. And so it's competitive for the good stuff, let's say, the good deals, the good locations, premium lots, premium features. And last week with Cash Flow Revis, we talked about price to list to sale price ratio as kind of like a proxy to competition and how competitive a specific market or market segment is. And this is, on average, what is the percentage that a property will sell for based on its listing price? And, Rob, when you were picking up properties in the Niagara region or in Hamilton, those markets were similar in terms of level of competition to Waterloo Region. But 5, 6, 7 years ago, properties are typically selling around asking price.
Oh, yeah, 100%.
Since then, right, your average, historical average, I looked this up, historical average was 96 to 98%. So typically a property should sell within, 3 to 6% of the asking price. The old strategy, which is pretty common, is price it kind of where you think it's worth, give or take a few percent so you have some room to negotiate. That's how like my parents bought properties and sold properties, right?
And that's how I was buying properties like prior, like COVID too. Same thing. It was, within that 5 to 7% of list price was essentially where it is. And then we just went absolutely bonkers. Yeah. You got a property that's been on the market for a couple of weeks. All right. Let's throw them 5% under asking price with a few conditions in it, see how they take it. We'll probably get close to that. Nay. That doesn't happen nearly as often. Even now, our list to sale price ratio, which I nicknamed our spicy ratio, because the higher it is, the spicier the market is, the hotter it is. It's only at 105%. Whereas traditionally, for the last couple of years, it's typically been closer to 110%. So if you're watching this video and you know absolutely nothing about Waterloo Region, assume that any property you're looking at is going to sell 5% above the asking price. If it's premium location, if it's priced, if you're looking at it, you're like, ooh, Zach, that's really cheap. It probably is. So it's probably going to sell more than 5% above asking price. There is no such thing as an easy, oh my God, layup screaming deal. There's not enough inventory. Those deals get bought up too quick. And typically if it's that good of a deal, you're going to get multiple offers and it's going to sell for fair market value. Yeah. Typically speaking, guys. So watch out for that. If you know nothing, and this is what you take from this video, is average about 5% above asking price. And this next slide I want to go over. I wanted to talk about the declining affordability. So this is a graph of the median price per square foot
for residential properties in Waterloo Region. In 2021, we were at $435 a square foot. What were lending rates in 2021, Rob? 2%?
Oh, yeah,
Low 2?
for sure. You're 2.25, somewhere around there,
Right?
even some less. Yeah.
So we are now at $436 a square foot. So $1 a square foot more. It's exact same cost per square foot for residential properties in Waterloo Region. But what happened to our lending costs? Double, triple?
Oh, triple.
So I get the same cost per square foot, but to carry or to acquire and carry is going to be a double or triple the financing cost. So what I'm getting at here is price value per square foot, very similar, but the cost to acquire, the cost of finance and carry is dramatically higher, and that is squeezing affordability. Mortgage financing is the biggest contributor to inflation right now in Canada. There's a bunch of reports that just got put out about inflation not coming down as much as they thought it was going to last month. Whispers about interest rates going up again before the end of the year. Listen, yes, that might happen, but it's just really important for either investors or if you're considering buying your first home or upsizing and getting a great family home to live at forever, like take into consideration that how much affordability is getting crunched right now, and that this is an extremely subtle transfer in wealth. And what I mean by that is people that are getting priced out of the market entirely, it's going to be so much harder for you to get back in. And people that are offloading real estate with the expectation that they're going to be able to buy 50%, 25% less than what they get now, guys, what's really going to happen is we may get a little pullback. Maybe we may come down a little bit in price, but there's no way asset values are going down 25 to 50%.
No way.
It would be, our country would be set on fire.
Yeah.
Game over. Canada's gone. It's dead. See you later. So what happens is if people aren't getting into the market, or if they aren't able to weather the storm and they aren't able to stay in real estate, they're going to miss when the property values are going to continue to increase. Interest rates go like this long term, up and down, up and down, up and down. They will always go up. They will always go down eventually. How long they stay up, how high they go up, I don't know.
Yeah.
But over the long run, your asset values will continue to rise over the long run. And I'm confident in that because we are just incapable of building enough new units quick enough, period. So if people continue to want to come to Canada to go to school, to work, to raise their families, to start businesses, which Canada's saying, hey, yeah, we want you here, the price per square foot will eventually start to go up again, and the asset prices will continue to increase. So your affordability is really getting crunched. What we're advising our clients is acquire something that you can comfortably afford given the expensive financing environment now. Hold on to it for dear life for the next 3 to 5 years. Real estate is not a get rich quick scheme, ladies and gentlemen. And then when better financing options become available, your asset value would likely have risen, or now you have more affordable financing and you'll make more cash flow on it.
That's a really good point, Zach. And I'll add to that here, like in terms of what we're advising our clients of from the perspective of when you look at the rates, right? Essentially, the variable rate right now being based on the Bank of Canada overnight rate just isn't something that's very appealing right now. It's just, there's not a huge discount on these rates. But when you actually take a look at the fixed rates, and if you're paying attention to data, a lot of what we're talking about here is simple economic supply and demand, right?
Yep.
And if you take a look at like the actual data in terms of the rates, over these next couple of years of what the projections are for as the rates start to stabilize, we'll see this trend come down a little bit. And I put a video out on this a little while ago in terms of what that's going to look like, where the asset specifically itself is going to continue to do that little uptick, right? As people come in, it's not just about immigration. It's also about people moving from these like greater, metropolitan areas to more tertiary markets where they can afford a little bit more, which is also still driving up the demand. So when you're looking at like these 2-year fixed rates for now to determine like getting out of this turbulence, just a few weeks ago, I was saying, okay, 3 years might make a little bit of sense, 3-year fixed. I'm not entirely confident on that 3-year anymore, where I'm more looking at 2 years to watch that decline. So that's a really good point that you mentioned there. And like from the financing side, I'm looking at the economic data to see that. That's really the advice that we're giving our clients today. Allows you to get into the market as well.
Yeah. And I just I can't stress enough, I used to be a perfect planner type of person. Like everything had to be perfect before I did something. And then when I got into real estate, my first team lead, my first coach was essentially just like, nah. If you just go out and try new stuff without taking insane risk, you'll learn more just by doing and making mistakes obviously with some sort of guidance and plan and, a little bit of a margin of safety. You're not selling the farm here, ladies and gentlemen, but you'll learn so much more by making educated decision and just taking more action than you will just sitting and waiting and planning for the perfect thing to happen, because perfect isn't real. And so
no, it's not happening.
I'm not saying, hey guys, this is the perfect time to buy, or sell or invest. Not what I'm saying. Perfect time for everybody is totally different. And there is no such thing as a perfect time either. But what I am saying is that take a little bit of perspective. I ask this question to people if they're like, oh, I don't think there's great value. And I was like, okay, well, do you think property values in Waterloo Region are going to be more expensive or less expensive in 5 years? And they're like, oh, yeah, probably more expensive. I was like, hey, what about 10 years? And they're like, yeah, definitely more expensive 10 years. Like, guys, then what are we talking about here? Find a deal you can afford now, whether it's your home or an investment property. If your goal is to invest, if your goal is to build wealth in real estate, find a property or a type of property that you learn it really well, learn the areas that they are bought and sold in really well, and just wait until you find the right deal at the right price given the current market conditions, and just hold it for 5 or 10 years.
Oh, yeah. Don't try to time the market. Like, that's the worst entire thing. And you're trying to catch a falling knife. Don't stop trying to catch a falling knife.
Don't touch yourself. Don't do it. Yes. Don't do it.
Just so, the perfect time, I think, to add to that, the perfect time is the time that's right for you.
Yeah.
Right.
And it's tricky to define that for everybody, but I think people are just really scared right now, and their expectations are just out of whack. Like, clients' expectations or investors' expectations that you're going to be able to burr and get all your money back in 12 months or less. Guys, like, that only happened because our market was so aggressively appreciating, and that renovation costs hadn't caught up with all the other costs associated with real estate. Well, now they have, and financing's a little bit tighter, and appraisals aren't coming in super high because asset values and property values aren't increasing every month. So just readjust your expectations. I just want to reiterate, real estate is not a get rich quick scheme.
No,
it is not a scheme. If you want to invest in real estate, buy good properties in good locations at fair market value, maintain them well, get decent tenants, pay down the debt, and just hold it for 10, 20 years. And then, me, you, and Rob can see each other down in Costa Rica or in Mexico on the beach, because
let's go.
I'm a simple guy. Good locations, decent properties, hold them and take care of them. Like, that will never go out of style. Straight up.
I completely agree. And, for anybody that says, like, what's the secret sauce? That's the secret sauce.
That's right? The greatest thing about real estate is there's not a ton of secrets. It's just like, you just got to go out and do it. And so I'm going to talk in the next slide real quick just about buyers and investors. Well, we covered a lot of this stuff because we got into it. But like, in the long run, our lending options are going to fluctuate. And listen, if you guys don't have somebody in the commercial space or in the investor space for financing, shoot Rob a message. Like, firsthand experience, great experience, and like, can put into more context of the expectations of what lending options are for the short term. But ultimately, guys, like, the asset values are going to continue to increase, especially here in Ontario, if we continue to be, for lack of a better term, donkeys when it comes to developing and bringing new units to market. Like, yes, I like a lot of things about how and why we build the way we build in Ontario, because we get really good quality product, but at the same time, we just can't build them fast enough, and we can't build enough of them. So I really want to just highlight how important it is that, yes, interest rates like this, asset values long-term will continue to rise. So as inventory starts to add to our local market here, Rob, in Waterloo, we went from, let's say, I think it was like 1.6 months of inventory to 1.8, 1.9 months of inventory in a month. Ooh, good deals are still going fast. So if good deals are moving fast and financing is getting harder and more expensive, values getting crunched, how do you identify and find the right deals? And if you're buying a family home, or if you're an investor, you have to clearly define what is a need and what is a want. Investors need value, cash flow, appreciation, value add potential, redevelopment potential, whatever. That is different than, I want a place with, only 2-bedroom units, or garage storage, or, extra feature. I want properties that are turnkey. Okay. Well, if that fits what you need for your investment, then great. Let's get a property with those features, but clearly identifying what you need out of that property. Do you need the money back in 10 years, 5 years, or is that gone money for retirement for the wife and the kids? Like, sit down with yourself or your financial advisor or Rob or myself who have experience in investing, and clearly identify what your needs are for your investment property. That's something I go through with a lot of people that watch our videos, that reach out to us, Rob, that are talking, hey, Zach, I'm checking out some of the investor Hotlist videos or properties. I think I want this type of property at this price. It's okay. Well, what are you going to do with that property? What's your goal for the first 5 years with this property? Is it just this one, or are you planning to roll this into multiple? Then you really start to open up Pandora's box. And I know as somebody for you, you're on the financing side, so you really opening up the whole box.
Oh, yeah.
I know you're having those conversations with your people. So it's like, okay, you're going to go buy this 10-unit property. What are you going to do with it? Because sure, you're happy to go give them the mortgage, and I'm happy to go sell them the property that makes sense for them. But in order for this to be a successful investment for you, all of us need to understand what you're buying, why, and what we're going to do with it. And does what you want to do with it make sense for your long-term goal? And just like investors out there, take 5 minutes, take 10 minutes, really consider that, because understanding your goal is really going to help you understand what deals make the most sense for you.
Yeah, that's a great point, Zach. And from the financing side, just like yourself from your Instagram, me too. I'm the DM behind my Instagram. I always like to have these strategy calls right from day one, because it's not just, you may as an investor have the question of hey, how do I fund this deal? Great, no problem. Anybody can buy the property. We can get you the funding, but it's about understanding how to properly position and place that. Because if you come today and say, I'm a brand new investor, I want to buy my first, let's say 2-unit property, and then essentially in 5 years from now, I want to be at 10 units, your financing and your acquisition on the realtor side of things needs to start at that 2 units with the correct financing in place, so that you can properly transition to that multifamily over time. So really great point. Just book the call, have that strategy session together, even if it is 6 to 12 months in advance, right, Zach?
100%.
It gets prepared.
Yeah, I wish if investors were just no, I know the type of deal I want, just go find me the best deal like this. Okay, great. I'm happy to do that. You already know what you're doing. You need the type of deal. We'll go hunt that type of deal for you. Same for you. If you're working with people that are a little bit more experienced, hey, I got these 2 or 3 properties coming up for a refi. I need to refi these and make an acquisition like this. You're okay, we don't need necessarily, you already have the goal. You already have the vision. But for the most of you guys and girls out there, if you want somebody in the real estate space to actually provide you legitimate advice, understanding the whole picture and where you want to go is the only way. It's going to take a lot more work up front, but it will dramatically reduce the amount of problems and mistakes you're going to make. And I'll tell you right now, Rob, the number one problem that I see for a lot of small to intermediate level investors is the financing side, because they haven't set up property 2, 3, 4, 5. They figured out, how do I make the best acquisition for the best financing for this property here? And then they go do their next step, and they're like, shit, I didn't consider that. So
very short-sighted.
Great mindset, because you guys as investors, you're taking, hey, I'm going to do something today as a sacrifice financially to, be better off in the future. So you have forward thinking, but also just give yourself, a little bit more assistance, a little bit more advice in advance. Could save you thousands. I
thought you told me to take action. Yeah, we did. Yeah, we told you to take action. However, let's position you properly as well, right? And you're right. There is a big difference, right? For anybody that's watching here that's experienced, you understand what you're trying to get to and where, what steps it takes to get there. Cool. Happy to have those conversations. Super, super simple. But again, for anybody starting out, get it done right from the beginning. And if Waterloo is your market, there's so many different pockets in Waterloo, right? I'm actually excited to come out and have lunch with you, because I want to get to know, as I've been on the channel this week, it's been cool to see these different types of markets, but it's great for me to be able to share with my clients as well as hey, Zach's got what you need in this location. These are some of the pockets and opportunities that I'm seeing. Let's get those on the go. I would love that, man.
I would love to grill all the guests too. Because you're an investor yourself. You're just oh man, I want to know more about what's going on in Windsor. I want to see what's happening in Toronto. I want to see what's happening. I want to grill all of them, because I'm genuinely curious. Obviously we can't, because we don't have all the time, but before we get into some numbers, guys, investor Hotlist. So Rob, we share this every single month on our Instagram page. We post about it every now and then, but every single month we send out this, post is, hey, get in touch with us for the investor Hotlist. Every single week, you guys get an email. I go through all the off-market upcoming listings that we have, any access to other listings, either for a brokerage or other investors we work with, and all the on-market deals, and say, hey, here's a short list of the multi-units. Here's a short list of the duplex conversions, the potential flips, the value-add projects as well, with links to the listing, so you can go through the photos, you can look at all the information yourself, and then I'll give you a couple point form notes about all the properties and why I think they could offer value. So if you know nothing about Waterloo Region, if you want to keep tabs on what's going on, if you want a little bit of better idea of the types of deals that we are looking at, this is a really good introductory. If you're an investor or a buyer or a seller out there that's like, nah, I have, like, things are happening now, okay, then maybe this isn't for you. Hopping on a quick call to better understand the types of deals that you're actively looking for or the property you're trying to reposition or sell, that's more of a direct conversation. But this is completely free. Just go to our website, the Contact Us page, fill out the quick little form. Tell us a little bit about the types of deals you're interested in, or just say, hey, I just want to check out, the deals that you guys are seeing come up in Waterloo Region. I'll email you once a week. We started to do some more background resources as well, like some other podcast episodes, some other YouTube videos. So if we have other content or other useful resources, we share the links in our emails every week as well. And if you want to view the properties, if you want to book a call, it's a great way to just get direct access to me. I monitor that email, and you guys can book a call or a meeting with us to talk about the specific properties. Chances you're going to find the next home run deal is pretty slim, because if it's a home run deal, guys like me and my clients are going out and looking at it the day it's listed, and we're offering on it. So this is a good just way to learn the basics, and then obviously get in touch with us with specific deals. So investor,
there's so much value in this.
Yes, sir.
And it's free.
And it's free, baby. This is also free. So last week with Cashflow Revis, he said this was my treasure map. I got more comments on this than almost anything I've ever posted on the Canadian Real Estate channel. So I'm gonna do a legitimate map. It may be a little Mickey Mouse with the highlighted, green and yellow, but this was like, the yellow is the LRT station, the red are big developments that are already approved right along the LRT. The X's further down are the condo developments that are happening out off the highway, off Fairview Park Mall area. I put in the GO station, the tech hub, the hospital, so people can really get a feel for, hey, these corridors are really positioned to get redeveloped like crazy. Tons of opportunity for investors in those green lines. Personally, we have focused a ton in those areas for our investors and for our own holdings. We own multiple properties within those green lines because they are close to everything. The locations are so good that even if I have to hold them for 10, 15, 20 years, I know I won't lose money. I'd bet the bank account, if I held those properties for 10 to 20 years, there's no way I'll lose a dime. In fact, I'd probably make a ton. And that's why we focus on purchasing and owning real estate in those locations. So I want to put up to the group here, what else do you guys need to know about Waterloo Region? Like, I get a lot of questions about what are the best locations, what type of cap rates, what are the rental rates. We share all that information, every other month or so on the videos. But if there's specific things that the viewers out there, hit us in the comments. Like, go to Rob's page, leave him a comment if you have specific questions about the financing or about the deals that he's working on. If you have specific questions about Waterloo Region, comments here or hit us on the Instagram page. Like, I have an idea of what investors want and need because I'm an investor myself, but there are always other things that we can share. We may also have resources in the back pocket that we could just email you or hop on a call and share with you that could really just change your mindset or change your understanding of our market. And ultimately, we want to come on here, Rob, and share value about our experience and what our knowledge base is in our local market. So if there's specific things people want to know about, this is your chance.
Yeah, I think this is a great opportunity. And here's the thing, there's no dumb questions.
No dumb
right?
questions.
When you're any question, the dumb question is actually the one that you don't ask, and an opportunity to do that. As Zach mentioned, our DMs are always open. Reach out, ask the question. Even if you want to know what type of deals we're working on today currently, this is great. There's so much value in this. It's unreal.
Yeah. Well, and I just think one thing that really accelerated my career was I had a team leader that was more experienced and straight, was just better at the job than I was. And I got 5 years worth of real estate experience in my first year just because I was around somebody that was that much better than me in my space. And so I'm not saying I'm the best at anything, but if I have knowledge and experience that I can share with you, I've had a lot of people specifically coming out of the GTA saying, hey, I want to look at some of these types of deals. Awesome. Come down, meet with me in my office. I'll share the basics about my market, what properties rent for, areas to go to, areas to stay away from, what you can expect for cash flow and appreciation and cap rates. And then we'll go window shop some properties so I can just show you firsthand, hey, this neighborhood has these types of properties. Here's why they're good, or here's why they suck. Here's why we do like them or we don't like them. Here's how they fit into what you think you want for a deal. You'll get months and months worth of real estate knowledge and experience in one afternoon with me. And I've had a lot of really positive feedback from people that have come down to go look at, ADU projects, duplex conversions, larger multi-units in the commercial lending space. But my goal is, how do I take everything that you need to know, give as much of that to you in a 3, 4, 5 hour window so that you can go back to your plan and figure out, okay, is this legit? Can I make something happen here? Is there value? So just the quickest way is a straight line. So if you guys have questions or you want to get together and do something like that, leave us a comment or hit me up. Before we're going to go through some numbers real quick though. So this section we'll go through for investors. So we're going to talk smaller multi-units, where we're seeing value in those types of deals. That conversation will talk about prices, cash flow, and interest rates, which you're definitely going to have some time to chime in on those. And then we'll also talk about larger multi-units. I know you personally, you have some deals on the go for clients with those types. And I love your opinion, but we're going to go over numbers. And typically, I hate going through Excels. I like the Excels. I hate going through them on screen with other people because it's just like a wall of numbers. Like, you don't know what their assumptions are. You don't know what they've set up. But I wanted to make really simple examples, guys. So a lot of our people are making acquisitions on small multi-units, for example. They're looking at duplexes or triplexes or duplexes that can add a third unit as well. And around $850 is a pretty common purchase price for these types of properties. A lot of duplexes are listed around that price, give or take. And these are what the numbers look like with current interest rates, 30-year amortization, 6.5 with 25% down. Okay, this isn't just a 20% down. This is a 25% down situation. Your mortgage, after you pay your expenses, your rental income for a duplex that around that price point should be about $4,600 a month. And you're about $93 a month negative cash flow at a current interest rate. So you're out about $100 a month, let's say, Rob. So you're saying, Zach, well, everybody always says, I need positive cash flow. I need positive cash flow. I need positive cash flow. And I'm saying, yes, I highly recommend that you are acquiring, especially if you're newer to investing and you don't have a ton of options or you don't have a ton of properties and experience, finding something that is break even or positive cash flow should be one of the number one priorities, right? So if you want to put 25% down, you're about out $100 a month. Okay. Most people can stomach about $100 a month, no problem. What you can do as well is you can put a little bit more down, or you can try and negotiate a different price, or you can try and negotiate a lower level property at a lower price point and see what the difference is in rental income. But what I want to highlight here is the purchase prices today will not last. So a lot of the advice that we're giving clients now is find a scenario where we can break even or be positive cash flow slightly on acquisition for the smaller multi-units. This is easier for the smaller multi-units because there's more of them and it's easier for you to get them vacant. A lot of owner occupiers, a lot of tenants leaving and vacating properties before they sell them, their family owned properties, nieces, nephews, cousins staying out there, so on and so forth. So what I want to highlight here is, if you're making an acquisition at $850, yeah, even if you're purchasing it as is with 25% down, you're out about $100. But if interest rates drop to 5.5% in year, 2 years, 3 years, right now you're making $350. Okay, if they drop to 4.5%, you're making $700 almost. And if they drop to 3.5, which may take a while, but if it does get there in the next 5 years, let's say, you're up $1,000 a month. And why this is so important is, Rob, in 2021, 2022, people are paying over $1 million for duplexes because they break even and they made a couple $100 a month. Yeah. Well, if interest rates go back down to 4, 4.5, 3, 3.5%, asset values, i.e. the duplex value, is going to go up. And so what I'm really highlighting is find a good location, find a duplex in decent condition. If you don't want to do a value add project, put your 20, 25% down. You're going to be close to break even, if not up a little cash, and just sit and wait for 2 to 3 years. By the end of the 2 to 3 years, interest rates will have either stopped going up, stabilized, and likely starting to come down. And all of a sudden, you're going to look like a genius because you're going to have a duplex in the 800s when everybody else is paying $9 or $1 million. So this is a 25% down option just for the duplex. I did want to talk.
I was going to say, I wanted to add one thing to that, Zach, and sorry to cut you off there before we jump slides here, is that when you're looking at your ROI calculation, the return on investment calculation, you've actually got 3 things, right? You've got your cash flow, you've got your appreciation, and you've got your mortgage pay down. Now, only one of which is guaranteed as long as you're making your mortgage payments, and that's actually your mortgage pay down, right? All of us here are making our mortgage payments, okay? Having said that, even though appreciation is not guaranteed, even if you used a small 1% on that money, that number right there gets you into a positive position. Today, you're negative $93 or negative $100 into that investment. But throughout the duration of that year, you're actually getting that slight uptick with that mortgage pay down that actually makes this asset profitable. To your point, Zach, over time,
Yeah,
will make you incredibly wealthy. So I wanted to add that part in there too, because I'm having
100%.
those conversations with people that are like, oh, Rob, should I sell? Should I, what should I do? I'm like, hey, take a look at this option though. Have you looked at this on your overall ROI calculation?
That's huge. Like the debt pay down. And I wanted to keep the numbers simple, but yeah, we're not accounting for debt pay down and we're not accounting for appreciation. Even if you ran that at a 1 or a 2% appreciation for 3 to 5 years, you're paying down anywhere from 50 to 70,000 in debt, and you're increasing the value by 70, 80 grand. Yeah. So look, we obviously clearly believe in real estate investing. I think there is a ton of options, but specifically, I would even be more inclined to take a little bit more risk in terms of purchasing a property at today's price.
Yeah.
And weathering the expensive mortgage financing for the short term. If you can't afford a lot of volatility, all right, let's talk about how we can make an acquisition with a little bit more of a margin of safety. But ultimately, if you can put 25% down now, that'll also make the refi and the equity pull out in the future, if that's what you do, that much better. Because let's say,
super lucrative.
Right? Let's say you take a 3-year fixed on something, or a 2-year fixed on something now, and it's about break even or making $100 a month, let's say. Okay, if I put 25% down and I refinance it, that's only going to give me more equity to pull from, because I'm just going to take that back up to an 80-20 mortgage in 3, 4, 5 years when I'm ready for that refi. So put a little bit more in now if you can. If you don't want to do a value add or you're not going to do a ton of renovations after you acquire, all right, buy something in a good neighborhood that's in a decent shape, put your 25% down, and then catch it up on the refi in 3, 4, 5 years when interest rates are much more attractive. People will be buying properties at 100, 200, 300 grand more expensive than what you've purchased yours at. And now you're going to have the same interest rate as they do. So dealing with the short-term volatility and the interest rates might be worth a peek. I think what we'll do next is we'll just jump into some sellers. And maybe before we go to the slides, let's talk. Sorry, I'm killing Cole. Cole's hooking us up with the editing. I want to talk the larger multis as well. And so, Rob, you're financing some deals for some clients as well. And what we've seen is for multis, guys, people that are buying multis right now, they are buying them to reposition them in the short term for a long-term hold. And what I mean by that is the multi-unit game is much different than what you hear a lot about people talking about on social media. Oh, I got all these units vacant. I'm just going to fill them and make a ton of money as soon as I acquire this property. Multi-units don't work like that typically. Typically, multi-units are already tenanted. Tenants have been there for 3, 4, 5 years. Asset prices have increased. Rental prices have increased, but their leases are likely 2, 3, 4, 5 years old, if not older. And what I mean by this is your income today will not justify the price you need to pay for it if you want a lending, unless you bring 50, 60, 70% down. So the secret sauce is, okay, well, how do I make an acquisition today? And how do I also finance or get cash to improve the value of the property in the short term to increase my rental income for the long term? And so, Rob, you can speak to this maybe a little bit more specifically, is like a lot of your people are, we can make an acquisition, maybe not that sexy lending rates, but I can set them up into a reposition product for a better long-term hold, let's say 1, 2, or 3 years after their initial acquisition. And I'm assuming that's a strategy that you guys are taking a lot of your larger multi-unit investors to.
Yeah, 100%. And I mean, essentially what you're getting at there, Zach, is that, we're looking at commercial financing, right? And one thing I want to put out here is that commercial financing doesn't have to specifically be your storefront, your plazas, things like this. Commercial financing works specifically, and not to inundate people with numbers here, but on a debt coverage ratio of the property specifically, where the income, it's based on the NOI. So income versus the expenses, and then you get your debt coverage ratio as long as we meet that. And essentially, to not get into the weeds part of that, is that if our debt coverage ratio is short, like Zach mentioned, where we have leases that might be 3, 4, 5 years old that don't justify the purchase price of the property, there's interim financing options that are available for that. And what that means is it's basically looked at from a perspective of at stabilization of this building down the road, we're basically lending a portion even of, let's say, the renovation money. There's so many different financing options, but you can lend up to, let's say, 75% of the acquisition of the property, and then even a portion of the renovation funds to the clear exit at the very end. We talk a lot about CMHC in our brokerage because we do a lot of CMHC deals. It is a unicorn type financing, but the reality is the exit has to be planned efficiently from day one. One
Yes.
thing I want to point out here about this is that lenders today, like if you buy a building that is fully occupied and you say, you know what, in 6 months, I'm going to have a vacant building, lenders already know that's probably not going to happen. Okay.
Yeah,
And they're
no.
going to, and even for us, because we see so much of it, it's like, hey, Zach, you know what, man? Unfortunately, I can't take this to the lender with a 6-month strategy on these 5 to 10 units.
No, not
Can you
happening.
look at potentially a 50% or 25 to 50% in the next 12 months? Okay, that's something that I can have that discussion with the lender. It's a little bit more realistic. Because if you're going from $600 a month to $1,500 a month in rents,
Yeah.
how are you going to vacate a building in 6 months with that delta that new tenant has to pay?
Yeah, too
So,
big of a difference for them to be like, that's definitely going to work out.
yeah, 100%. And here's the thing, what I like to always say about multifamily, because this really jacks me up and gets me excited. You are in control of the income that you can generate on that property. Today, you might be paying a premium on that, but when you look at the opportunity that lays ahead at stabilization, moving through the value add of that building, and more importantly, whatever market, like the Waterloo market, if you're buying multifamily in Waterloo, if I'm buying multifamily in Waterloo, Zach, I need you. You need to help me with that. I need to know what my rents are. I need to know what my vacancy rates are.
Yep.
Although there's part of an underwriting perspective as an agent, myself on the mortgage side, we still need to understand what that looks like.
Yep.
So it is a little bit of an in-depth conversation, but what I want to stress here is that, number one, they are assets that you can get into, not based on your personal debt service ratios, okay, where it's the income versus expenses personally, versus being able to actually get into it with the building performance and the strength of the borrower. Okay,
Yeah.
so there still is a strength of borrower component here, but seeing tremendous opportunity in the multifamily space. And one of the buildings I'm actually working on is in the Kitchener area that we have coming up. It's a 15 to 20 unit conversion there. We're utilizing CMHC on the exit and even getting a portion of the renovation money to get through that and to exit out into
That's what I'm
CMHC.
talking about. Like I see great value for small to intermediate level investors. I see great value in 3 and 4 and 5 unit buildings. If you can get any sort of vacancy, or if you can get a premium location and then just slowly let the building turn over, because the locations that you can get those are all brick builds, nice size lots, convenient to transportation. Those will only appreciate more and more above and beyond, say, let's say suburb locations, because the city's going to grow. It's going to grow out, and it's going to start growing up, and it's just started to grow up. So we're saying, hey, yeah, it might take a year or two until you get this building or this property exactly where you want it. But like we just said in the beginning of the video, it's not a get rich quick scheme. It's just find good properties and hold them for 5, 10, 15 years and laugh. So I just really want to stress those deals available. The larger multi-units, good deals sell so fast though. Anything above 10 units, if it's even close to fair value, it's getting an offer or it's sold firm within the first couple of weeks, because there's so few of them that actually come to market, because people realize that, hey, unless I'm selling it for a premium today, I'm just going to keep holding this, because as soon as interest rates come back down, value is going to jack back up. So like I said, with the smaller multi-units and the duplexes, I will deal with the short-term volatility and financing costs as an investor in exchange for a better purchase price today. And so one of the things that I want to highlight before we get into the IDUs is sellers. And this is something I've really noticed more so this year than any other year I've been in the business, is multi-unit sellers are a little bit, let's say, not necessarily misinformed. I think they are not as clear on how those properties are sold now versus when they may have purchased them. And what I mean by that is, you have to know, if you're selling a multi-unit property, you have to know how to have the conversations with prospective buyers, because the way people are buying a property now is so much different than when most of these multi-units were actually purchased. It's a totally different environment. So what I mean by that is, what are the numbers for the property that you're holding, your multi-unit property that you're holding? Your numbers that you're holding right now are different than what a potential buyer's is going to be. And you need to be able to either market, show, or provide, some sort of value in the property you're selling to a new potential buyer. So, I think next month I'm going to go over specific selling and marketing strategies for these larger multi-unit properties. We just don't have time to get into it now, but understanding how buyers buy these properties, where these buyers are found, and how they actually make the acquisitions is so big, because even if you bought property 2, 3, 4 years ago, your numbers are totally different than what somebody's will be on acquisition. And Listen, I'm an investor. I work with buyers and sellers of investment properties. When you're selling an investment property, you want top dollar. When you're buying, you want the lowest purchase price. Whether you're buying a single family home or a 100-unit apartment building, that's just, you want the best price as the buyer, and you also want to sell for the most as the seller. Well, as an investor, if I'm selling to another investor, they need to believe that there is value for them in the long run. So how do you position the property to get fair value now, but also offer fair value to a potential buyer? It is a little bit of a dance. It is very circumstantial, but I've seen so many sellers cancel the listing, get it expired, or not sell it at all. They're just sitting on the market, not necessarily because they're all overpriced, but they're just not positioned to understand and communicate where the value is for a new buyer. And that's really where myself and my partner Matt come in, is as buyers and sellers of those properties, understanding how to have those conversations and how to market those specific things. Big difference in actually selling versus listing a property. So we'll cover that next month. We're just going to get finished up with ADUs. So had another conversation with my partner Matt and a few other investors we're working with. We're seeing two types of people take these ADUs and these garden suites on. Families are doing it for convenience. Extended families, new family members, maybe they're dissolving bigger family properties and they all want to live on the same property. They want to build a separate living space for mom, dad, grandma, grandpa, aunts, uncles, whatever. And then we're seeing investors. Families do it for convenience. Investors are doing it for the numbers. So think about this. If I'm going to buy a duplex and I'm going to go spend 800 to 900,000, I'm spending about 400 to 450 a unit. Well, I could go build a brand new two bedroom unit for 200 to 300 grand. And I can go rent it for 2,500 a month. So if you already own property, if you're equity heavy or you're a value add investor, building a unit on a property you've already purchased or that you're going to purchase may be a more economical way, and you may have more control over the cost and eventually the rental income and the return of that project. People that own duplexes or single family homes that are heavy in equity, these could be great options for. These could be fantastic options in the short term to be able to build or acquire an additional unit cheaper than you can go out and buy one in the open market. Or if you're an investor that's looking for a value add project, do something like a duplex conversion and add a third unit, or buy a 3, 4, 5 unit property that you can add a separate, whether it's attached or detached unit or two. Huge value add, a little bit more work, more cash up front to pay for the building, but on the refi or the resale and the extra cash flow you're getting, numbers look good.
Yeah, so, this is, Zach, you and I just did one of these for mutual clients.
Yeah.
And that buy specifically, when you mentioned the 450-ish, like roughly per unit at the duplex, we were able to get the ADU brand spanking new, which they have rented out for right around that $2,600-$2,700 range Beautiful. Currently. And the cash flow that's on this property for what they purchased it for is astronomical. And here's what we did with it. We took it actually to commercial financing.
Yeah.
And so in this case, we were able to get a large equity play on that property, which opened up the ability for them to actually continue to scale even in the residential side. It's a heck of a deal. It's a beautiful property. I had a lot of fun working with you on that one, but these clients absolutely found a steal. The ADU is something, that I think some people are overlooking currently with highest and best use of their existing properties that they have, especially as the cities and they open up the bylaws and rules change and so on and so forth. Like this is a great strategy.
Yeah, it can be. And this is something that we're really into. So I got some photos of an update for an ADU that we've done. This is actually a property. We did some YouTube videos on this property. It was a side split, brick built with siding that we converted from a single family home into a legal duplex last year. And now we're actually starting to build the ADU. So for this one, it's actually on a hill. And so we needed to elevate the earth in the backyard to level it out before we poured the foundation. And we built a retaining wall all the way around the exterior. So the shield stone's the retaining wall. We got a whole drainage system around the exterior of the ADU so that obviously if it's elevated, we need to make sure any sort of water drains away. And then we got the concrete poured. Shout out to Nith River, by the way. So these guys poured the concrete for the other one that we're doing in downtown Kitchener. And then we got them out to do this one as well. Second one they've done for us. They were fantastic. No free ads for Nith River, but they're great guys. They hook us up. And here's kind of where the slab is. Rough-in's ready. We're getting all the trenches set up for the drainage. We're getting the trenches set up for the additional utilities. And then we're starting to frame. So I'm sharing more on the ADUs on our Instagram. We're going to start posting a lot more videos. Once we know when the project's going to be wrapped up, then I can kind of line them all up so you guys can see the progression of them. But in the future, we are going to release, hopefully we can do it on the Canadian Real Estate channel, but we will release a time to do an event at the ADU so people can come look at it. You can see how we did the parking, how we set up the utilities, why we did the design, what we used to build it, how much it cost, how much we're going to rent it out for, so you guys can get a better understanding of how these are actually going to work if you want these potential properties in yours as well. So if you guys want to get in touch, Kevin at King Street Construction, he's taking care of this whole project for us, from concept to permits to all the sub trades, all the skilled trade, everything done, like done. So if you guys want to quote, if you want to figure out if your property can do it, if you want to have a conversation with him about construction and building stuff, Kevin's your guy. If you want to have a conversation about your portfolio, selling, refinancing, making new acquisitions, positioning your properties for those types of things, have a conversation with myself and Rob. Those are the types of contacts you guys are going to need. We can come in and say, hey, you know, this is what I would do to this property. Here's how much value it's going to add. Here's how much it's going to cost. Here's what you could sell it for. Here's what you could go and acquire if you had these types of funds. And then Rob can explain to you, okay, here's all the financing options for acquisition, refinance, and potential exit. Having those conversations up front will only help you succeed. So that's what we have to cover for today. We went long because we got Rob on and we have a bunch in common and we have a bunch of questions, but there's a ton to talk about now because our market's just changing so much. You know, 2 years ago when we first started doing these videos, our market's just up, 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 up. Hey, get in while you can while financing cheap and before prices get too expensive. Our market takes a little bit more work, a lot more strategy, and a little bit more expertise to find success. So don't hesitate to reach out to us. Like, we're here to help. That's why we're doing these.
Yeah, absolutely. And I really appreciate today. This was awesome. Zach, there's a couple things before we close out here that I want to mention. Number one is there was many opportunities that came up throughout this episode of how industry professionals, meaning your power team, which is a well-used word out there, but how your power team can save you so much time, right? Yep. Whether it's a few hours spending at Zach's office to go over, you know, learning all about Waterloo, or whether it's coming into my office and meeting with me and having a strategy plan when it comes to your financing. None of this is any cost, but think about the amount of hours that you can save from this that can actually allow you as an investor or a home buyer to actually focus on the things that you're good at. So that's one thing I wanted to point out there. Number two is, in this market specifically, I'm seeing a lot more of this opportunity for highest and best use. Yeah. As I do more deals in the Kitchener-Waterloo area, this is something that, you know, I have a lot of conversations with people, with potential investors that are looking in this area. It is worthwhile to continue to spend some time on this market specifically to take a look at. So definitely reach out to Zach. The fact is that you're willing to offer not only yourself, but also, you know, contractors, trades, things like that can help streamline the process for your investor, just like me. Because if Zach doesn't have anybody, I got somebody for you. Yeah. This is where we bounce ideas. So Zach, thanks a lot for a great episode today, man. This was amazing.
Appreciate it. I feel like we could have gone another hour pretty easy.
Yeah, we totally could. So before we wrap it up, what's the best way to people? I know you mentioned your Instagram. Yeah. What is the best way for people to get a hold of you, Zach, and schedule some time?
You don't know me at all, and we have no relationship yet. Instagram. If you're not on social media, our contact information's on the website. You can reach out directly to me. It's myself, my partner Matt, and our administrator Derek. Like, we're not getting passed around to minions or to junior agents. You know, we know exactly the type of people we need to be working with and where we can add value. And so if you're, you know, an investor starting, scaling, and building your portfolio in Waterloo Region, you know, you're our people. Reach out to us. Be happy to chat. If we have any resources or contacts for you, they're all yours. So, Rob, appreciate it. This is easy. Having you on is easy, brother.
I look forward to doing it again.
Absolutely. Yeah, I appreciate it, guys. Thanks for having us on. Appreciate you watching the video.
Thanks very much, everybody. And if you want to get a hold of me, you can reach me on Instagram as well at rob.chopra. Happy to help you from the financing side. Again, Zach, thank you. Thank you to the Canadian Real Estate Channel. This has been awesome, and I wish everybody a wonderful day.